There we go. All right, welcome, everybody. Sorry about that. Forgot that I had it on pause. Yep, appreciate that. Part of my stream deck that I use to control everything isn't working. Apparently, that's one of the buttons. So I do apologize. Welcome everybody to the VectorVest mobile coaching stream. My name is Patrick France, senior instructor here at VectorVest. Glad to be with you guys. Hopefully everybody is having a good day. Hopefully everybody's doing well this morning. If you guys can hear me now, type in VV Nation into the chat. Let's get those going. Welcome everybody. Giving you guys a few minutes to get in. We should be live both on Facebook and on YouTube, so everything looks to be working correctly here, which is definitely a positive thing. Let me go ahead and do one other. There we go. That way I can see the chat better on our Facebook side. And Martin coming in with the VV Nation. Welcome, Martin. Hopefully you guys are doing well. Ford Inc. coming in with the VV Nation. Glad to have you here today. Boston coming in. Iggy coming in with the VV Nation. Glad everybody could be here. Today we've got a good topic to talk about. It's definitely pertinent to what's going on. If you were hanging out with us during our AMA yesterday, then you have an idea of what we're going to be looking at. Or if you've just read the title, you probably get a good sense of what we're going to be covering here today. So here at VectorVest, one of our bread and butter trading strategies that we've had, and it's been successful for years, is bottom fishing. If you're not familiar with it, bottom fishing is finding the most oversold stocks or the most beaten up stocks after the market has a sell-off. And then when the market starts showing signs of a rebound based off the market timing, that'll tell us to start looking into those, because the stocks that are beaten up the most are the ones that tend to rebound the fastest right off the bottom of a market. So what we're doing when you combine the power of VectorVest market timing with the power of our bottom fishing scans, which we'll take a look at in just a few minutes, you can really increase your portfolio's value in a very short period of time. So it is more of an aggressive strategy. It is more of an aggressive style of trading, but it can definitely help boost your portfolio, get those profits in the green quickly, so that way you can reinvest into other stocks, those longer term plays, or more swing trade plays, trading market. You've been waiting for this video. Glad to hear it, Mash. Glad to have you here today. Also, if you guys are just getting in here and you haven't already, make sure we got over 100 people here already. Make sure if you haven't smashed that like button, do so right now. It doesn't cost you a thing. It helps us out with the YouTube algorithms, continues to grow this awesome community. So if you haven't done that already, make sure to do so. That way, we can keep doing these streams to teach you guys how to use the VectorVest Stock Advisory app. Hey, Chris, hopefully you're doing well. All right, so as always, if you're new, what we typically like to do is we start off taking a look at what's going on in the markets. Then we'll dive into our topic of discussion. And then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So if you want to see your own stocks analyzed, make sure to stick around towards the very end and we'll get those analyzed for you. All right, so with that, let's go ahead. Take a look at what's going on in the overall market. Everything is showing fine on my end. I'm watching my mixer right now. So if you guys are having sound issues, let me see. 1 minute. Let me see if that's better. Is that better for everybody? Because my volume is showing that it's right in the range. I haven't touched anything with that. So let me see. Is that better for everybody? Good on my end. Reopen. Yeah. All right. Perfect. So there we go. Everybody. So yeah, I'm seeing a lot of you're fines. You're good. So yeah, if you're having issues, try refreshing, try closing and reopening. That should definitely help out. And Maria, I can trust whenever Maria says, I go off of that, because she's always been pretty good at letting me know whenever there's any issues and when everything's working fine. So, all right. So starting off on the home page right now. As we can see, the Dow is up about 1/3%. The NASDAQ is up 0.4%. S&P 500 is up about 1/3%. VectorVest Composite also up about 1/3%. We started off in negative territory today, so the fact that we're seeing these in the green right now is definitely a positive sign. Now, this is a tip really aside from what we typically cover, but this is a pro tip for you guys. Learned it from my father many, many years ago. And he's always taught me, whenever we've had a down market and you look at the market from an intraday perspective and you see that it opens up lower and then grinds higher all the way into the close, that's an early sign that the market's starting to reverse course. Same goes for when the market's been in a nice steady uptrend and then you see the market moving high or gapping up that day, but then slowly fading that gap, then that's a sign that the market's starting to run out of steam. So seeing this is definitely a positive sign. Now, granted, we still got more market hours to go, but starting off in a good step here. All right, but even though the major markets or major indices are in the green, we do have 3 ticks into the yellow. Therefore, the color guard is neutral, and VectorVest advocates caution when buying stocks at this time. If we scroll down just a little bit, we get to the color guard, and the color guard analyzes 3 key components of our market timing system. The first component we're looking at is the price, which is the price of the VectorVest composite. If you're not familiar with the VectorVest composite, it's an arithmetic indexed average of about 9,200 stocks out there in the US markets. It gives you a better representation on what's actually going on in the markets because it's not just looking at small subsets of the market, such as the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 9,200 stocks out there. So it gives you a better feel for what actually or which way this market actually is moving. The next indicator is the RT or relative timing, which is looking at the short-term price trend of the market. It's cast on a scale of 0 to 2, and above 1 would indicate the short-term trend is up. Below 1 would indicate the short-term trend is down. So at 0.92, we can see that it is down still. No surprise, the market's been pulling back, but it has been slowing down and actually starting to turn back around over the last few days. If we look at the BSR, or the buy to sell ratio, the buy to sell ratio is looking at the overall health of the market. It's looking every single day. VectorVest gives a buy, hold, or sell rating on every single stock. Well, we take that buy and sell rating and we see, how many stocks have a buy, how many stocks have a sell. If the buy to sell ratio is above 1, that would indicate more stocks have a buy than a sell or that there's overall market strength. And if it's below 1, that would indicate more stocks have a sell than a buy or overall market weakness. So at 0.46, we see there still is weakness in the overall market, but at the same time, it has been slowing down and starting to turn back around over the last few days. And because we're seeing that, because we're seeing the price of the VectorVest composite moving higher, we're seeing the RT moving higher and the buy to sell ratio moving higher day over day and week over week, we have 3 yellow lights across the board. Now, the trend of these 3 indicators are comprised to come up with the market timing indicator, which looks at the underlying trend of the market. It's cast on a scale of 0 to 2, and so above 1 would indicate the underlying trend of the market is up, below 1 would indicate the underlying trend of the market is down. So at 0.75, the underlying trend of the market is down, but it has been starting to show signs of getting better than what we've been dealing with here over the last few weeks. So definitely seeing some positive signs. Still too early to call a true reversal in the market, but definitely seeing some positive signs moving us in the right direction. So after the trend, we then get after the MTI, we then get the trend column, which shows 2 parts of the trend each and every day. Now, the first part refers to what we like to call the primary wave, which is just simply looking at the short-term or weekly trend of the market. As we can see, it is up since the price of the VectorVest composite is higher than what it was compared to 5 trading days earlier. The second part of the trend is looking at the underlying trend, or the MTI, and since the MTI is below that level of 1, the underlying trend of the market will remain down. After that, we then get the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. So as you can see, we still remain in that confirmed down situation as of today. So now, one last thing we like to take a look at on the homepage is the advanced to declines at the bottom. And we like to see a 2-to-1 bias typically on any given day. So if the markets are moving higher, we want to see twice as many stocks advancing than declining. And if the markets are moving lower, just the opposite. So since the markets are moving higher right now, we want to see twice as many stocks advancing, and we currently don't have that. Right now we're sitting at about 48% of stocks moving higher and about 38% of stocks moving lower, so not meeting that 2-to-1 bias there. All right, so let's see. All right, so with that, let's go ahead, jump good on my end. Yeah, I'm seeing a lot more people saying everything's fine than having issues. So if you're having issues, check your internet connection, restart YouTube, hit that refresh button. That should help you out. All right, so let's talk about our main topic here today, bottom fishing. Once again, bottom fishing is something that's unique with VectorVest that I haven't been able to find anywhere else out there. It's the art of buying stocks that have been beaten up in a down market, and the most beaten up ones in a down market, because those tend to be the ones that snap back or rebound the fastest there. I don't recall, Mash. Why? Why? What's up with that? But there's a few key things we look at with the market timing that we want to make sure that we're aware of, so that way we know when to start looking at utilizing bottom fishing. All right, so let's talk about a few of those things today. And actually, we're going to start off right here on the homepage and mainly in the color guard. So there's a few things that you can see that we'll point out every single night in that market, or the daily color guard report found right there at the top. But we're going to make sure you guys are aware of these, so that way if you don't get to watch that daily color guard report on a nightly basis, you still are aware and you can keep up to date by checking in, let's say once a week or once a day, just to make sure where those signals are sitting at. So starting off with the first one, the buy to sell ratio. Now, once again, the buy to sell ratio indicates the overall health of the market. Now, whenever the buy to sell ratio historically has gotten to 0.2 or below, that indicates an oversold condition in the market. Granted, with any overbought, oversold indicator, it can stay in oversold territory for quite some time, but that is one indication that the market is grossly oversold and could be starting to look for a bottom. The second indicator that you'll notice some information with to help you identify when to start bottom fishing is the MTI. So historically, when the MTI gets to a reading of 0.6 or below, that historically is showing that the market's starting to look for a bottom. Now, once again, just because it hits that signal doesn't mean the market's going to turn back around and start to move higher. So therefore, whenever you start to see the buy to sell ratio get to 0.2, the MTI get to 0.6, that's the time to start paying closer attention to the overall market. Watching the daily color guard report more closely at those points, looking at the timing, waiting for signs of a reversal here. So right now, we look at where we've been. We got pretty close to it just a few days ago at 0.64, and then the buy to sell ratio at 0.28, but we're not quite there yet. We could be getting close, but we've seen a little bit of a rebound the last couple of days, but we haven't really hit that fully oversold condition that would indicate a good time to start considering bottom fishing. So while the markets are rising right now, be cautious. Right now we haven't really hit that truly oversold condition that makes bottom fishing effective. So keep that in mind. Now, there's a good rule of thumb that we typically cover here at VectorVest, and that is the first green light in the price column is after a confirmed down is the earliest signs that the market's starting to reverse course. So right now, we've had all red and all yellows since that confirmed down a few weeks ago. So therefore, we haven't even gotten that earliest sign that the market's starting to reverse course and start to move higher by seeing that first green light. Now, what would it take? Well, first and foremost, the price of the VectorVest composite would have to move higher day over day and week over week. Plus, 5 trading days earlier would have to be a yellow light. So therefore, we've got at least, 3 more days before we could even see a possibility of a green light. So therefore telling us we're not quite out of the woods yet. We don't have full confirmation that the market's starting to reverse course here. So always keep your eye on the color guard there and wait for that first green light. Now, from an ultra aggressive standpoint, we do have a potential primary wave up situation as of today, because the price of the VectorVest composite is higher than what it was compared to 5 trading days earlier. And if you want to take a potential entry, if you want to, dip your toes in the water at this point, you can, but we really want to see, the oversold conditions being met and then wait for that primary wave up signal. So while we have that primary wave up right now, keep in mind, the primary wave, to get that official signal, we have to close the market out this way. And once again, we still have a lot of time left in the market before the market closes to get the official signal. We have a preliminary signal as of right now because the price of VectorVest composite is higher. But if the market starts selling off closer to the end of the day, we could easily see that primary wave turn back to down. So don't try to jump the gun just because you see it up right now. Wait at least for it to close in that up situation, and then look at tomorrow for follow through. Now, what do I mean by follow through? Well, the general rule of thumb is whenever you see the major indices all up 30 minutes after the market opens tomorrow, that would be a good indication of follow through after receiving that primary wave up situation by the close of the day. So while it's nice to see that primary wave up right now, take it with a grain of salt. It has to close the day out like this before we can really say we have an official primary wave up. So if you're somebody who is aggressive, looking for a new entry, trying to get in as early as possible, wait for the day to close, see if we have a primary wave up by the end of the day, and then at that point, wait for follow through tomorrow. Typically 30 minutes after the market opens, we want to see all three major indices moving higher. If we don't have that, that tells us we have a potential reversal, or we don't have follow through, we don't have confirmation, and the market may still have some downside, which would align with what we've been talking about, since the buy to sell ratio and the MTI both haven't really hit that true oversold condition quite yet. So we could be just experiencing a little bit of relief from this downward move that we've seen today, or we've seen over the last few weeks. So be cautious with that as we move forward here. Now, let's say today we do get that primary wave up. Let's say we stay in a primary wave up situation for a few days now, and we finally get that green light in the price column of the color guard here. Well, that would be our earliest indication that we could start to go bottom fishing. Well, luckily VectorVest has you covered inside the VectorVest Stock Advisory app with some of our most popular bottom fishing strategies. To get to those bottom fishing strategies, simply on the left-hand side, go down to the screeners, go to Explore Screens, and there's a folder right here for bottom fishing. So we've covered these quite a lot, but these are some of our most popular bottom fishing strategies available. Is this the searches or trends bottom fishing using Unisearch? So these are all searches, not the trends or not the trend scans there, Ron. But great question though. But so first one we have here is Jailbreak. This is our founder, Dr. DeLito's most favorite bottom fishing search. It really has very little filters on it, and you're going to find a lot of lower dollar stocks with this one here. So if we go take a look at the scan criteria, the sort is really where the power of bottom fishing comes from. If you see, it says VST divided by RT descending. So whenever you see that sort or something divided by RT, that's typically going to refer to a bottom fishing search. What that's looking for is the highest combination of VST with the lowest RT values. So the stocks that have the best combination of value, safety, and timing, but that have the lowest timing currently. So therefore, you're looking for stocks that are overextended. So when the market starts rebounding, these are going to be the ones that tend to snap back and start to rise quickly or outpace the market. Chris, we'll take a look at that in a few moments. So that's what we're really looking for here with all bottom fishing searches. But as you can see, the price and volume filters, $1. So as you can see, a lot of stocks that have that $1 criteria with 100,000 average volume. So these stocks are going to be liquid, but also going to be very low priced. You are going to typically see more speculative to aggressive stocks in this scan. Now, one thing I will say, as you can notice on the left-hand side of this list, all these stocks have a sell rating. Now, let me make sure I'm extremely clear on this. Bottom fishing is the only time you will ever hear VectorVest ever recommend to buy a sell rated stock. Our typical philosophy is to buy rising stocks in rising markets and sell falling stocks in falling markets. But with bottom fishing is the only time you have an exception to that rule. And that's because we expect these stocks to be sell rated. They've been beaten up pretty bad in the most recent sell-off. So yes, they are going to have that sell rating, but when the market starts to come back, these extremely oversold stocks are going to snap back quicker. And once again, helping you outpace the market and putting some explosive gains into your portfolio very, very quickly. So that way, once you've made those quick gains, you can put those into the stocks, the bigger names, the more steady stocks that you'd be interested in. Bottom fishing, is it on VectorVest 7? Yes, Peter. It also is in VectorVest 7. There's a whole folder there, searches bottom fishing, that you can go and locate. There's a lot more than what we have in the mobile app that to give you more fluctuation or more variety, but in the mobile app, you get some of the most popular ones available to you. All right, so as you can see, a lot of names you may not be familiar with, but at the same time, this is where, this is why VectorVest has been, or this is one of the many reasons why VectorVest has been around for so long, is because of how popular and how successful bottom fishing can be when used at the right time in the market. Now, where would bottom fishing not be usable at? Well, if you recall, let's go back a couple of years, 2018, the last really 4 or 5 years up until 2020 or 2022. The markets were on a nice steady uptrend, and anytime the markets pulled back 5% or just a few percentage points, you'd see everybody scooping up shares, buying in, buying back in, buying the dip, if you will. Bottom fishing isn't effective for that. Why? Because you don't have a true sell-off in the market to create good oversold conditions in stocks. You pull back mildly, but you're not really getting truly overextended to the downside there. So therefore, in those types of situations, bottom fishing isn't going to be the most effective strategy. But in these current situations, when you see the markets dropping significantly, having, 1,000-point down days, those are the kind of conditions that would indicate a truly good opportunity for bottom fishing. How many of these would you buy when the market does turn? So that's the thing is, good question, Gil. These all refresh every single day, all throughout the day. So if we had a green light right now, and these are the stocks that were coming in, 5 to 10, no more than 10 now. But 5 to 10 is the recommended, depending on, how big the portfolio is, how much you need to spread out between what your portfolio plan is or what your trading plan is. But typically 5 to 10 is going to be, the ideal amount there. So yeah, actually, what is it? I think it was AMD many years ago was trading at $1.80, came up in jailbreak. It's been about 6-7 years ago at this point, but came up in the jailbreak search and skyrocketed the next day. Well, you made over 100% that day, but then you look at it now and you see where AMD is. So this is where bottom fishing can really play a big role because, it's been time tested. We have plenty of live trading to back up what we're saying here. So, all right, so that's jailbreak. If you're not comfortable with low dollar, more risky, speculative, aggressive trades, then we have a better option for you, the S&P 500 divided by RT. So what you're looking at when we go in, take a look at the scan criteria. We're looking at the stocks in the S&P 500. So you're already starting off with the best 500 companies in the US markets. Once again, has to have a price greater than $1 and 100,000 average volume. But this is looking at the sort RT ascending. So you're already taking the best basket of stocks out there. So therefore, all you're doing is looking at the worst RTs. So the ones that have been the strongest downtrends, because once again, those are going to be the most likely stocks that are overextended to the downside. So therefore, when the market rebounds, those are going to be the ones that snap back and start to move higher. How aggressive are these stocks? Should we buy after 10 a.m., during day, or wait to market close? So Andrea, depends on which one you get, but any of them, you typically want to wait 30 minutes after the market opens. Let's say, as we talked about earlier, let's say we get that green light by the end of the day today. It's not going to happen, but just for example, for right now, let's say we get that first green light after the confirmed down situation by the end of the day today. So what are we doing? Well, we get our shopping list ready. We go ahead, run our scans at night, get a basket of, let's say, 5 or 10, and then we wait 30 minutes after the market opens, make sure that the markets are getting follow through after today, and then start to place our trades or open up those trades from that point. And then from that point, you use your stop criteria, your money management rules that we talk about, and that dictates when you exit those trades. So hopefully that answers your question there. Also, do like Mash says, if you haven't already and you're just getting in here, make sure to smash that like button. Doesn't cost you a thing, helps us out, and helps continue to grow this awesome community. So if you haven't done so already, which a lot of you haven't, go ahead and do so right now. All right. You're welcome. All right, so getting back, let's go take a look at the stocks. We see more familiar names with this one. We have Newmont Corp, Warner Brothers. Well, let's go back. Refresh it. There we go. Warner Brothers, Stanley, Nvidia's in here, BKR, Intel's in here. So seeing a lot of semiconductors. Seagate is in here. AT&T is in here. Comcast, Moderna, Charter Communications, Verizon, 3M, Mitch, Para. So you have a lot of more common names, and these are going to be the ones, once again, that are most overextended to the downside from this most recent sell-off. Will the market go down? Hold on, give me a second. I got to check my Magic 8 Ball. It says to wait and ask again later. So unfortunately, Francisco, I'll have to ask later. Don't have an answer for you right now on that one. All right. So yeah. And once again, if you recall from the very beginning, if you're just tuning in, this is getting you guys prepared for bottom fishing. Not saying right now is the ideal time. This is just making sure you guys are prepared, because as the old saying goes, I'd rather be prepared and not need it than need it and not be prepared. You don't want to get caught off guard. You don't want to try to rush into it, because when you rush and try to get caught back up, that's when you make mistakes, and that's when you overlook some of the basic things, and then you end up getting yourself into a bad spot, and you don't want to do that. All right, so here, after the S&P 500, the next one is the S&P 600, so small cap, but any S&P indexes. So here you're getting EHTH, Bed Bath & Beyond, which has made a lot of headlines as of late. ILPT, Fossils in here, looking for other bigger names. TSE, UIS. So you're seeing some bigger names, some names you may not be familiar with, but these are going to be the smaller caps. So these are typically more aggressive, lower priced, but looking at the scan criteria, once again, the primary sort is RTA ascending. So looking for the ones that have the strongest downtrends from this most recent sell-off. Then you have the basics, $1 minimum price criteria, 100,000 average volume. And then once again, out of the S&P 600. So therefore, you're already knowing where what kind of stocks you're getting into with these. 500 divided by RT, take RV and RS into play? No, because you're already dealing with the best 500 companies in the US markets, MASH. So therefore, it's not a VST divided by RT. It's just simply looking at the RT and ascending order. So you're just looking, because you're specifying a smaller basket of stocks, the 500 stocks. So it's not like you're looking at all 9,200 stocks. In that case, you would need, the VST divided by RT. But because you're already dealing with the best 500 companies out there, you're just looking at RTA ascending. Same with the S&P 600 small cap. All right. Then last but not least, actually we'll read the little criteria here. So VST Mighty Mites finds low price stocks with good fundamentals that have been beaten down. This is a good search at the beginning of an up market. This sort will bring stocks with a low RT but a relatively high VST and growth to price earnings ratio to the top of the list. So this is looking at more of the fundamentals, beaten up lower dollar stocks, but having a bigger emphasis on the fundamentals. If you're not familiar with GPE, you probably are familiar with the PEG ratio. So price to growth earnings, PEG, price to earnings growth. This is just the inverse of that. So therefore it makes it easier by putting it on, one being neutral, above one is good, below one is bad, keeping it more systematic or uniform like our other indicators out there. So we go taking a look at the scan criteria first and foremost. So it's looking for the highest combination of VST and growth to price earnings with the lowest combination of RT. So once again, putting more of an emphasis on the fundamentals of the company, but you're going to find the lower value stocks. Looking at the screen criteria, the price, no surprise there, greater than $1. Average volume has to be greater than 100,000. Looking at it, relative value has to be greater than 1.2. So it is putting an emphasis on that relative value or long-term potential. And then the growth rate, the forecasted earnings growth rate has to be less than 45%. And then relative value, RV plus RS, has to be greater than 2. So meaning RV and RS both have to be above that level of 1 for the most part. Now, granted, if you have an imbalance, that could make it greater than 2, but both of them have to be greater than 2. Sorry, not bottom fishing yet, but VectorVest EMA squeeze. There you go. I mean, ASO's had a great performance over the last couple of days. So, yeah. Your EMA squeeze is definitely a popular one there. Looking for bands. I'm a fan of the Star Search. It's an older one, but it's still a very sound plan. So if you've never taken a look at that and you like the EMA squeeze, you may want to take a look at the Star Search as well. All right, so let's go ahead real quick. Take a look at the stocks that are coming in here. So we look. Hey, here's one that you guys ask about week in and week out. Zim coming into the top of the list. So if you like stocks or if you like Zim, this could be a good bottom fishing search for you to look at because it has stocks similar to that. So this could be an interesting one for everybody out there that asks about Zim week in and week out. Now, if you notice, because there is more of an emphasis on the overall fundamentals, look at the ratings on these stocks. Not every single one of them has that sell rating. Some of them have a hold, some of them have a sell, and you even have YPF, which has a buy rating in here. So, this is definitely going to be a more unique bottom fishing search with a bigger emphasis on the fundamentals of the company. So if that's your cup of tea, but you want to take the lower dollar stocks or willing to take lower dollar stocks, this would be a good one to consider for yourself going forward. All right, so with that, if you guys have any questions on any of these bottom fishing scans, let me know in the comments or in the chat. I'd be glad to answer those for you. Also, I see half of you guys watching right now haven't hit that like button. That's disappointing. You guys are disappointing me right now. Let's see if we can get at least 50% of the half of you that haven't already hit that like button to hit that right now. And with that, if you guys don't have any questions, but you have stocks that you want to take a look at, start putting those into the chat. I'd be glad to get those answered for you and start to analyze those for you. We do have a couple already from the Facebook side, so we'll get started with those. And then we'll start to take a look at some of the other ones there. All right. So very first one coming in from Mark. Exro. All right. EXROF. Exro. Poor long-term potential. Well, first off, let's go over this together. Make sure everybody's on the same page. So there's 4 indicators you see at the bottom here, and they're all going to be cast on a scale of 0 to 2. To keep it easy for yourself out there, above 1 is good, below 1 is bad. The first one we look at is relative value or RV, which is looking at the long-term potential of the stock over the next 1 to 3 years. As we can see with Extro, it's below that level of 1, so therefore that does indicate poor long-term potential. The next indicator, RS or relative safety. This is the risk factor. If it's above 1, that would indicate less risk compared to the average stock out there. Below 1, more risk associated with it. With Extro, below 1, so that does indicate more risk associated with it. If you want to take it one step further, because the RV and RS are both below that level of 1, this shows that this stock is a speculative play. Next indicator we look at is RT, or relative timing. At 0.42, well, relative timing, first and foremost, is looking at the short-term price trend of the stock. Since it's cast on a scale of 0 to 2, below 1 tells us this stock is still in a sharp decline currently. Then the combination of these three are comprised to come up with our master indicator VST, standing for value, safety, and timing. And this gives you a great overall quick snapshot of the stock on both a fundamental and a technical basis, something you're not going to find anywhere else out there. At 0.46, this indicates this stock is unfavorable on both a fundamental and a technical basis. Now, there is some positive news. We talk about Extro quite a lot here. There is some positive news with one of its partners, Linmar, providing workhorse with the E-axles. So hopefully that can give a boost to Extro, but Extro needs to see those numbers coming in. All right, let's go ahead, take a look at the next one for Chris, ATEN. ATEN, good long-term potential, does have more risk associated with it, making this an aggressive play. It is in a steady decline, so it's an aggressive stock. It's in a downward trend. Overall, the stock is not favorable here. You were asking, though, do you think it's hit a bottom? Let's take a look. So right now, we have potential support down here, but we broke through that support right around, what is that, closing at 1340. Let's call that 1350 just to make it easy. You can see we've had multiple touches here, right there, there, and then broke down below it here. Right now, you're trading right below that level of previous support. So therefore, that support floor is now treating it at, or should be treated as a level of resistance. If we can't get back above that point, then no, I don't think we've hit the bottom yet. It's too early to call it, especially with it just breaking down below that point. This looks, as of right now, appears to be trying to reach, or, a quick retest of that support resistance zone. But if it starts to sell off, or if it can't break above that point, then that resistance is a hard resistance, and then most likely you'll see the stock continue to retreat. So hopefully that answers your question there, Chris. All right. JD coming in with my favorite stock out. Let's go take a look at it. GameStop, right now, it is a speculative play. I don't think anybody could disagree that it is a speculative play, that the company is trying to turn around. You're taking a bet that the company will turn around. They had their earnings yesterday, announced a new partnership with FTX, one of the bigger names in the crypto space. But this one, definitely a speculative play. Poor long-term potential, does have more risk associated with it than the average stock out there. It has been in a sharp decline just recently after that stock split. So overall, the stock is not favorable right now. But one of the positive things that you did hear from the earnings announcement from Matt Furlong is that one of their new objectives, now that they've got some infrastructure updated and they have the company's foundation more solidified, one of their new objectives that they're going to be working towards diligently here is the path to profitability. And that's really the main thing, is, seeing the company can start to generate profits rather than, booking losses in earnings. Do I still own GME? Yeah, yeah, I'll admit it. I still own GameStop. I have quite a decent sized position on GameStop. So I like the stock. I like what they're doing. I like what, the moves they're making. Until we see otherwise, yeah, I'm going to stick around and see how this plays out. Let's go see. Once you select a perfect bottom fishing stock, what is your best signal to go up, say, boil or cold? Louis, I don't think I'm following what you're asking. Those don't really trade directly with the overall trend of the market. So bottom fishing and then looking at ETFs based off a commodity doesn't really mix well. You're trying to make apple juice with oranges. Doesn't really work well. All right, mRNA. Good long-term potential, but does have a lot of risk associated with it. You are in a steady decline. Therefore, the stock's about average. But looking at timing at 0.69 tells us right now is not the time to be buying it. Now, once again, it did show up in a bottom fishing search, but the market timing tells us right now is not quite the time to go bottom fishing yet. So therefore, hold off for right now. CASY. Oh, sorry for that, Westmere. I must have missed that. Apologize. CASY. You have good long-term potential. You have less risk associated with it. You have a nice steady uptrend. Overall, yeah, the stock is favorable. Shop, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable. CVS. Looking at CVS. Average long-term potential. You have more risk associated with it. You do have a slight uptrend. Overall, the stock's about average at best. Depends on the way you look at it there, JD. We talked about it yesterday during our AMA. I don't have enough time to get into all the technicals on it right now, but definitely go check that out. We did talk about it. So definitely go take a look. ET, good long-term potential, but does have more risk associated with it. You're in a strong short-term uptrend. Overall, the stock is favorable. So Andrea is saying, shop bringing in new execs, operations, and finance. That's great. But once again, if we take a look at shop, poor long-term potential, a lot of risk associated with it, or more risk than the average stock out there. That identifies it as a speculative stock. So you're speculating right now that these new execs are going to be able to turn the ship around and get it back on track to where it was, the last few years. So I think that matches up. This is saying it's a speculative stock. And if you're buying it right now, based off of that, you're speculating on what you expect to happen from the new execs coming on board. So yeah, I think it answers that or matches that perfectly there. AMD, good long-term potential, less risk associated with it. However, you are in a steady decline right now. Overall, it's a good stock, favorable fundamentals, just not the right time to be long in it. Tesla, TSLA, good long-term potential, less risk associated with it. You're in a steady short-term uptrend. Overall, the stock's favorable here. NVDA, good long-term potential, less risk associated with it. However, you're not in an uptrend, you're in a downtrend. So therefore, you should not be holding it right now. It's a good stock based on the fundamentals, just not the right time to be holding it in your portfolio. ENPH. Let's see. ENPH. So for any Jockey Club members here right now, we did finally, it looks like, break above that level of resistance we were talking about yesterday in the Jockey Club. Looks like we're getting some follow through here today. So that's definitely a positive sign. Looking at the analysis though. Decent long-term potential, less risk associated with it, really strong short-term uptrend. Overall, stock's definitely favorable here. CTRA, good long-term potential, less risk associated with it. You're in a short-term steady uptrend. Overall, stock's favorable. AMZN, Amazon, poor long-term potential, less risk associated with it. So with a poor RV rating but a high RS rating, that identifies more of a conservative stock. And yeah, I think, most people look at Amazon as a safety play because of how big and how broad Amazon is in the overall, or pretty much every single industry in the US markets right now. So therefore, yeah, it's definitely more of a conservative play at this point. It's in a slight uptrend, not really where I want to see it, but and not enough to offset the lower fundamentals on the RV. So therefore, right now, Amazon is not favorable. How do I join the Jockey Club, Chris? Give our support a call. They'd be glad to go over it. I don't have access to your account or any of that information, so I can't answer it right off the bat. But give our supporter a call. They can talk to you about it and answer any questions that you have. Hey, there's nothing wrong with it. Westmere, I mean, from a long time Red Bull drinker, I like it, and I think it's definitely helped. They say they've done studies, and it's helped people lose weight, and I mean, I can definitely attest to it. Maybe the working out, or maybe the gym routine, maybe that, I don't know, but the combination of them seem to be doing just fine for me. Is it good? Yeah, there's some different ones. Some of them are better than others, but yeah, it's not bad. And that's the thing. So the good thing about it is the small cans, even the 12-ounce cans of the regular Celsius, have more caffeine than the 20-ounce Red Bull cans. So, I mean, you don't have to drink as much, and lower calories, no sugar, all of that, not even using the fake sugars. Yeah, I mean, they're definitely a lot better for you than any of the energy drinks out there. At least from what or the research I've done on it so far. All right, let's see. HTOO. Poor long-term potential, does have a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable here. So Drew, what I've found is they're at major wholesalers. So I originally found it at Sam's. I've heard BJ's, Costco, those places have it. But then, once you try them out, you can go on their website. It's funny. Their website, when you go to their store, it takes you into Amazon and everything. Their whole store is set up through Amazon. So not bad. Makes it easy. When you just set up an order and set it on the reoccurring, it makes it easy for you. Let's see. What was I on next? Did that FSLR. Poor long-term potential, has a little bit more risk than the average stock out there, but with clean energy, it's been taking off, so the timing is hot right now. This stock has been moving parabolically higher. Overall, stock's favorable. The amount, or as a speculative trade, a momentum trade, it's a good trade right now. So if you're not a momentum trader, move. Maybe this stock's not for you, but if you are, definitely take advantage of it. Is Red Bull made by No. So Celsius is now, I believe it was bought by Pepsi. So, different maker. Let's see. Rivian. Rivian's one I haven't seen talked about in quite a while. So Rivian, poor long-term potential, does have a lot of risk associated with it. Timing though, 1.2 is starting to make a new uptrend. That uptrend is not strong enough to offset the amount of risk on it. So therefore, right now, the stock is unfavorable. If you're somebody looking for momentum trades, obviously you may take it, take a piece of it, but overall, you need to be careful with this one right now. FSLY. All right, so FSLY, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable here. ULTA. Alta, good long-term potential, less risk associated with it. You're in a steady uptrend. Overall, the stock is favorable. I mean, yeah, everything, it has a buy rating. Everything looks good on it. Nice steady uptrend. What's not to like about that one? Let's see. CCRN. Good long-term potential. About average risk associated with it. Really strong short-term uptrend. Overall, stock is favorable right now. SGFY. We'll do a couple more, and then we'll wind things down. So SGFY. Poor long-term potential. A lot of risk associated with it. You're in a really strong short-term uptrend. You can see it's been moving parabolically. Overall, stock's favorable. It is a momentum trade. If you're not a momentum trader, simply stay away from it. And then we'll do one or two more here. Let's see. We did those. Got those covered. All right, so on good long-term potential, less risk associated with it, nice, steady, strong short-term uptrend. Overall, the stock is favorable. Why is Croc's safety so low? Let's go look at it. CROX. CROX, good long-term potential, a little bit better than average risk associated with it. You're in a strong short-term uptrend. Overall, the stock is favorable. Looking at the fundamentals here. Let's see. The PE is 7.5. Growth, or the GP is 3.98. Sales growth, 51%. Forecasted earnings growth rate, 30. Let's go take a look at the graph real quick. Change your graph settings. Change the lower graph to earnings per share. So here, over that's 6 months. Let's look at a year. You're seeing a decline in earnings ever since, when is that? The beginning to middle of July. So since the decline in earnings, that will definitely hinder that higher RS rating. All right, so that's going to do it for us. Let's go ahead, jump back into the overview page. And also, if you're just tuning in, you haven't already, hit that like button one last time. If you've already hit it once, don't hit it again. But if you haven't already, do that. If you've enjoyed today's stream, if you've been enjoying yourself, if you've learned something new to help your investing, don't forget to hit that. Doesn't cost you a thing and helps us out with the YouTube algorithms. So real quick, taking a look at the overall markets, the Dow is up 0.5%, NASDAQ's up 0.75%, S&P 500 is up about 0.2%, VectorVest Composite up a little bit more than 0.5%. Right now, we are 3 ticks into the yellow still. No surprise there. That's the best we're going to see by the end of the day today. Looking at the indicators, the RT is actually picking up on a day-to-day basis. It was flat. Buy to sell ratio also picking up, so showing the short-term trend, that downward short-term trend is starting to dissipate a little bit. Also showing more stocks starting to participate. Still not to the level that shows strength, but definitely a nice look there nonetheless. Looking at the advanced declines right now, 53% of stocks are moving higher, 35% of stocks are moving lower. So not quite that 2-to-1 ratio, but definitely strengthening throughout the session so far. Also, Westmere, just as a side note, if you guys are done learning, by all means, you can leave. But if anybody's interested in that Celsius stuff, I will say, since the beginning of the summer, is when I really switched from the Red Bull to Celsius, plus doing a consistent workout schedule. I've lost about 41 pounds since the beginning of the summer. So yeah, there's a few things I've definitely changed, but I don't know if that's the main reason, but it's definitely hasn't hurt anything. So if you're interested in it, definitely check it out. Can't hurt, especially if you're drinking 3 Red Bulls a day. I know that. I've been there. So yeah, definitely check it out if you're interested in it. All right, so that's going to do it for me today. Hopefully you guys have a great rest of your trading day. If you want to see more of us, if you're not tired of us already, make sure to come back at 2 p.m. Eastern. We have Glenn Tompkins, a fellow senior instructor, with me doing Trending Thursday, where he's going to talk about what's hot, what's not, what news and what headlines are really driving the overall market. So if you want to see what headlines are really, having an impact on the trading, make sure to come hang out with him at 2 o'clock Eastern time. Once again, both on our Facebook and our YouTube channel. So make sure to go show him some love a little bit later here today. So on that, it's been my pleasure being with you guys today, with everybody today. Thank you all for tuning in. I hope you have a great rest of your trading day. Have a great weekend. And until next time, take care. Adios and toodles.